Hi, I'm Len, and welcome to my channel. My channel is about my journey into retirement. I'm 6 weeks retired, now entering my 7th week, and today's topic is about medical insurance coverage after you retire. And I'll talk about this in two parts. One will be for my wife, who's Medicare eligible, and one for myself, who I am not Medicare eligible. So first, on the Medicare side of things, when we turn 65, we need to sign up for Medicare Part A. And you can either do that at your local Social Security office or go online and sign up for Part A. And for most of us, Part A, it has no cost to us. It comes free. It's paid out of the Medicare taxes we've paid over our life during working. And therefore, that coverage starts right away as soon as you sign up for it. And like I said, you are expected to do it at 65. There is a small percentage of people that if you haven't paid into the system, the Medicare taxes for at least 10 years, that you could face a premium for Part A. And that's something you would need to read up and educate yourself on. And I will attach in the description here a few links to channels that I've watched to educate myself on the ins and outs of Medicare and the various nuances of the system. Also at 65, we're expected to sign up for Medicare Part B. Medicare Part B is part of your more routine cares, doctor visits, and so on. So when you turn 65, you sign up for Part B. You can defer it if you're currently working or your spouse or partner is working and they have medical care coverage through their employer and you're covered under that. You can defer taking your Part B to some future date. Now, one thing I would suggest is checking with Medicare to ensure that the coverage you have is recognized by Medicare as being a valid substitutable coverage. If not, you could be open to future penalties for signing up late for Part B. So just something to be a watch out there. Again, something to educate yourself on with regard to any coverage you may have. In the case of my wife, we were able to wait 2.5 years after she signed up for Part A to sign up for Part B because she was insured under my employer. That insurance ended on August 1st, so she had to sign up and make sure she had insurance coverage in place by August 1st to have continuation in coverage. So Medicare Part B today in 2024, the premium is $174.70. In the case of my wife, they basically deduct that from your Social Security payment, make it pretty easy that way. I guess if you're not getting Social Security, maybe you set up a bank arrangement or something like that where they would deduct the cost of the insurance coverage. One thing to be aware of is that when you do sign up for Part B, the government is going to go back and look at what your adjusted gross earned income was in 2022. So they look back 2 years from the year you sign up for Medicare. And if your income is over a certain limit, you'll face paying additional premiums for what's called IRMAA, IRMAA. Again, you can go out there and educate yourself on those aspects. And there's a tiered approach. So depending upon how much you made in 2022, you can be at a tier 1 of additional cost, tier 2, tier 3. And it's pretty well spelled out in tables about how much additional fee. But it can be multiples of that 174.70 I mentioned. So it's not an insignificant additional fee, something to be aware of and to manage your exposure on that by some smart financial planning. One of the other options you do have is in the year that you retire, if you are expecting a significant change in income levels versus that 2-year look back, you can sign up for or fill out an SSA 44 form in order to petition Medicare to not charge you that IRMAA fee, but instead represent the expected income that you would have from retirement more looking forward. So you're not unduly penalized again for having earned that kind of income. And you can get around that particular cost. So something to look at again, educate yourself. That IRMA what could also apply to other aspects of Medicare, particularly Part D, which is the prescription drug portion of Medicare. So again, there are reasons to be educating yourself in the IRMA area. So we after deciding on Part B or getting signed up for Part B, we then began to continue to look at what additional coverages we want. Medicare Part D is basically your prescription drugs, and we decided that we would sign up for Part D. And so there are options for you to sign up with various insurance companies. So there's a little bit more of a choice process. In Part A and Part B, you basically were signing up for the government to provide the insurance coverage, and you really weren't in discussion with multiple options with various health insurers. Part D now, other health insurers get involved in coordination with the government. And one of the things you want to look at there is, number one, working with a broker. I would highly suggest working with a broker to help educate you on what your options are for your Part D insurance, help you assess what medications you're currently taking, and if that particular company offering that Part D coverage covers your medications at a pharmacies or pharmacy that is convenient and preferred by you, and what the co-pays are that may be involved in that medication, which would be in addition to the premium you're paying for Part D. So when you sign up for Part D, you will pay a premium. You will pay most likely a copay for your medications, although some medications have no deductible or copay. And what company provides you that coverage at a pharmacy that is convenient to you and covers your particular drugs? Again, I will mention that Part D Medicare coverage is subject to IRMA, not as substantial as what I mentioned for Part B, but it is fairly significant. And again, you need to educate yourself a bit on what that might be for your Part D coverage if you choose to sign up for Part D. Part D is considered to be an optional coverage. You're not required to do it, but I would say that most people would choose Part D to manage their pharmaceutical or prescription costs. Beyond Part D, and working with our broker who helped us sign up and get all set up there, we began looking at supplemental insurance coverage, or sometimes called Medigap coverage. So the Medigap coverage is intended to cover anything that Part A and Part D do not cover. So for instance, in Part B, you may have a covered expense by Medicare, and Medicare pays 80% of that expense, and you're personally liable for 20%. And that what the Medigap or supplemental insurance is designed to cover is that 20% of additional cost. So if you have some pretty significant medical expenses over time, that supplemental insurance could be something that is very important to you, and it's something you need to assess whether you want to have that insurance or self-fund your coverage. In our case, we decided to sign up for supplemental coverage. And the way we approached the supplemental insurance coverage was to talk with brokers about the various companies. And first thing to do was assess what companies were offering what plans. Okay, so now I just changed vocabulary. I've been talking about Part A, Part B, Part D, and now I'm talking about supplemental coverage, and I'm talking about a plan within the supplemental coverage. So slight nuance there. And in the plans, there's like a whole alphabet of plans there. But I would say most recently, the Plan F was sort of what everybody had been going into, which is now closed off. It no longer accepts new applicants into the plan, and it's closed to all of us today. A very popular plan right now is Plan G. A lot of people are signing up for Plan G, but those who are in Plan G are now experiencing fairly significant premium increases year on year. And part of that is because anybody who enters Medicare on disability is being put into a Plan G into the Plan G system. And that puts a lot of burden on Plan G from a cost perspective. And the only way for the companies to make up that cost is to charge higher premiums to all the participants in the plan. So something to think about. Then also there's Plan N. Plan N is very similar to Plan G, except you have some doctor copays involved that can be up to $20. So that those copays seem to be somewhat variable. We haven't had a lot of experience with that yet, but everybody says they're up to the $20. The other expense you could be exposed to too in Plan N is some doctors don't accept the Medicare negotiated service rates. And if they don't, then you could be exposed to having to pay an additional fee to that doctor. So that's something you can ask up front, whether that doctor would charge you that fee and know what you would be getting into. But there are states that don't even allow that fee to be added on top of what they would be paid by Medicare. And in the state where I live, Pennsylvania, they do not allow it. But if my wife went to a specialist in the state of New York for medical coverage or medical health care, she could be exposed to that. So it would be something you'd want to ask about up front. And that's the nuance of Plan N. So you have those potentially additional expenses. But first, our journey began on looking at what companies were offering the plans that we were interested in, which was pretty much Plan G or Plan N. And then we assessed the companies on their financial health, how long they've been offering it. Are they a true healthcare company or somebody sitting in between a healthcare company? Or, there were companies out there that you would typically go to for home and auto that were offering this supplemental coverage, and their depth of expertise there and history in providing that kind of coverage wasn't very long. So you wouldn't really assess the company options you have in front of you and maybe look at their history of raising premiums and so on, so that you're kind of narrowing in on who you think might be a more stable company to offer you what you want and at the premium that you can deal with, because the premiums do have a spread to them. They will vary. The plans themselves, one company offering Plan N or Plan G and another company offering Plan N or Plan G are very similar in terms of what they cover and what they pay. So there's not a lot of difference there. It's more about how do they manage their expenses and how reliable of a company they are. In our case, we decided to go with Plan N. We felt that was best for us, that premiums would be, although going up, they would be going up much more slowly over time, and that we were in a position that we could deal with the additional copays and stuff that we might need to pay to doctors over a period of time. Of course, we would have a lower premium in general versus a Plan G premium. So that kind of makes up for the copays when you sit down and you start doing the math behind it. As long as you're not going to a doctor like 2-3 times a week and incurring a lot of copayments, that the difference in a Plan G and a Plan N financially or mathematically might make more sense if you're going to see a doctor just a few times a year or so for routine medical care. And that's what led to our decision to go with the Plan N. One other thing I will mention is that a lot of people are familiar with Medicare Advantage. And the way I think about Medicare Advantage is that it is designed to provide you with the supplemental coverage as well as a number of other benefits. A lot of times supplemental plans, and they vary company to company, will provide you with vision and dental and even gym memberships in addition to the supplemental coverage. And you really just need to go out and educate yourself about Medicare Advantage plans and know the pros and cons behind them. For us, we looked at it and we decided that Medicare Advantage was not for us. And two of the major reasons why is that when you're in a Medicare Advantage plan, you're restricted to a network of doctors. So if you're someone who travels, within the U.S. and may spend 2 or 3 months down in Florida or a month in Arizona or wherever visiting family and stuff, during that period of time, you may not have in-network doctors that are available to you if you have a medical issue. And you may not be covered for those types of expenses. So it's something to really educate yourself. The other reason why we decided against it was that we do international travel, and Medicare Advantage really does not provide medical coverage internationally. And we were able to access better international coverage, at least for emergency situations, through a more typical supplemental / Medigap program that we went with. So ultimately, we ended up going with Plan N, and we used our broker to help us sign up. And that broker took care of all the paperwork. We ended up going with United Health via AARP. So we had to be an AARP member, which we were already. And then we were able to sign up with United Health. And again, our broker took care of all of that for us, in addition to helping us get signed up for Part D. That kind of took care of and has everything in place now for my wife's side of coverage. On my particular situation, since I am not Medicare eligible, I had basically 3 options in front of me. One was retiree medical. 2 was going out on the Pennsylvania State Exchange and looking for medical coverage as an individual. Or 3, because of the way my company was doing some reductions in force, I had the opportunity to participate in COBRA since it coincided with my planned retirement, but it just allowed me more flexibility to look at COBRA too as well. So when I looked at COBRA coverage, which is only for 18 months, there are certain rules that allow you to extend it, but I don't think I would meet those. So 18 months of COBRA versus retiree medical. My retiree medical, for whatever reason, was about $400 a month more than COBRA. And my COBRA premium is designed to be the same cost that my company plus me would have been paying for my medical plan plus 2%. So it's 102% of the total cost my company's group insurance program would have cost it. But my retiree medical was much more than that. And I just set retiree medical aside because that did not make financial sense right now. And in addition, I went out and looked on the state exchange, and that was even more expensive than retiree medical. So my near-term decision is to go on to the COBRA plan. So I have COBRA for my medical, my prescription, and then I was also to pick up COBRA for my dental and vision. And I could also add my wife to that too as well, since none of the other insurances we had signed up for covered her for that, and COBRA was an option for her, so we signed up for her on that too as well. So we have COBRA for the next 18 months. And then after 18 months, I'll go out to the exchange and I'll need about another 1 year's worth of coverage. So at the end of 25, I'll need to go out to the state exchange, shop around, get coverage as an individual, and I'll need that for about 12 months through 2026 in order to be able to reach my Medicare eligible age when I'll sign up for Medicare. And that's been my journey on the insurance side of things. My coverage under COBRA was reasonable. I would say probably not as bad as I was expecting. My medical and prescription cost was just a little over $800. And then adding in dental and vision made it about $850 a month for my medical coverages under that COBRA program. And then when I step back and I do the math of looking at COBRA for 18 months and then shopping and what the exchange cost would be perhaps in a year and a half from now, if I added that versus doing 3 years of retiree medical, it made more sense to do COBRA and state exchange versus the retiree medical cost. And that's pretty much what drove me in that direction. So I hope my comments have helped educate you or informed you in some way, and that you're able to use them in your own journey. And thank you for listening. And if you liked, again, what I had to say, please give me a thumbs up and or subscribe, and ask your friends to watch and encourage them to subscribe too. Help me grow my channel. Thank you very much. Have a great day and be well.